Hello, welcome to the European Open briefing for Thursday, February the 9th. I'm Rafi Poyajian, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So we have a slightly improved risk appetite this morning. The risk appetite has been improved a little bit by signs of improving corporate earnings in China, so that boosted risk sentiment in the Asian session, and we've got also slightly improved risk appetite as well in at the start of European trading. The dollar has recovered back above 112 yen, although its gains are still being capped by the uncertainty surrounding Donald Trump's policies. The main movers this morning is the New Zealand dollar. It fell sharply after the Reserve Bank of New Zealand signaled that rates will likely remain low for much longer than anticipated. Sterling is not doing too badly. It's currently trading above $1.25, and this comes despite after the Brexit bill easily passed through the House of Commons in the British Parliament without any amendments. And in commodities, oil saw an unexpected rebound yesterday after the latest inventory data showed a surprise drop in US gasoline stocks. So let's begin with the dollar-yen pair. We can see that it's pretty much range bound over the past 3 days. Yesterday it fell back below 112 yen level. Now it's back up again. And we're still seeing treasury yields not going anywhere near the levels they were when we had that dollar rally after the US elections. Yesterday they touched 3-week lows. They're up a little bit today, so that's helping the greenback bounce higher this morning. Although this uncertainty surrounding Donald Trump's economic policies, trade policies, they're dampening the overall outlook for the US dollar. Let's quickly mention the Chinese yuan. It's a little bit firmer today at 6.8650 to the dollar. We're seeing more and more signs that the corporate earnings are on an uptrend, and we're seeing stronger Chinese demand for commodities such as copper and iron ore, and that's leading analysts to up their outlook for the Chinese economy, and that's also boosting risk sentiment across global markets today as well. In terms of the main mover today is the New Zealand dollar. It's down minus 0.7%, currently trading around 0.7210 against the US dollar. The Reserve Bank of New Zealand held its first policy meeting today. They kept interest rates unchanged at 1.75%. The Governor, Graham Wheeler, said that the bank has adopted a more neutral policy stance compared to the previous easing bias. But in terms of the bank's projections, the inflation is likely to remain low, so that means that rates are unlikely to rise until possibly at least 2019. The RBNZ is also worried about the exchange rate, and in their statement, the bank said the exchange rate, a decline in the exchange rate is needed. So all of that weighed heavily on the Kiwi this morning, and that's why it slid sharply against the US dollar. If we move on to the pound, we can see the pound has been steadily rising over the past 2 days, and this comes despite the fact that the pro-European MPs in Parliament failed to win any amendments such as forcing the UK government to consult Parliament more closely with regards to the Brexit negotiations, particularly on issues such as maintaining close access to the single market. So the Brexit bill has now passed through the House of Commons without any amendments, so the government basically is not obliged to meet any conditions as far as MPs authorizing the government to trigger Article 50 is concerned, although the bill may see some amendments possibly in the House of Lords, but for the time being the pound is being boosted. Today it's mostly down to the fact that we've got improved risk appetite, and also we had some fairly gloomy Bank of England survey which raised concerns about wage growth and also on investment, but despite that the pound is currently up around 0.2% at 1.2560 against the US dollar. If you look at what happened to oil now, we can see that there was that sharp fall following the API figures, which showed a surprise build in US crude stocks. And yesterday we had that was on Tuesday. Yesterday we had the official EIA figures from the Energy Department in the US. Many analysts had expected a worse figure than what we had. Crude stocks rose by 13.83 million in the week starting January 30. Expectations were 42.53 million. Some analysts were expecting an even bigger build after that API number on Tuesday, but the fact that it wasn't that much worse than the API figure, we saw oil prices bounce back, but also there was a surprise drop in gasoline stocks, so that suggests that the oil stocks may fall over the coming period. So that boosted US crude oil, is currently trading up 0.8% at $52.75 a barrel. Let's have a look at today's economic calendar. We had some machinery orders out of Japan. They were more than expected at 6.7% year on year in December versus expectations of 4.6%. So that's another indication that Japanese economy did well in the final quarter of 2016. We had some German trade data out this morning. Exports fell more than expected in December, and the overall trade balance the surplus was smaller than expected, although that had limited impact on the euro. Coming up later in the day, we've got the weekly jobless claims out of the US and some speakers, Fed speakers, including Charles Evans and James Bullard, and also the Bank of England Governor Mark Carney will speak later today, although we'll have to wait and see whether or not they will mention anything regarding monetary policy. That's it from me. Thank you very much for watching and have a great day.